Okay, for this video, I wanted to cover how to enter royalty income in a TurboTax. And specifically, we want the royalties to be reported on Schedule E. So, royalty income, when paid to an individual, can go on either Schedule C as self employed income in connection with a trade or business, or it can go on Schedule E as royalty income. And so, I'll get into a little more details later on in the video about the differences between the two. But for purposes of this video, the royalty earnings that we enter are going to end up on Schedule E. So, similar to the previous TurboTax videos we've covered, we're working with John Q. Taxpayer here, and he's a sales agent in Florida. And so he has a full time job, right? So he's got a W 2 for his wages there. But in addition to that, what he did during the year was he created a sales training course for individuals that were looking to enter that space, right? So he's basically doing a little bit of coaching here. So he sells the training course through a third party online teaching platform. And so this platform hosts the course, they collect the payments, they manage all the students. And so in consideration for that, the platform takes a commission, right? That's generally how those platforms work. So John sells his course to 8 students for $40 a piece, and the online platform takes a 5% commission. So the royalty payments that he generated from selling these courses is $320. So $40 times 8 students, and then the commission, which is 5% of that total, comes out of there at $16. And so John's net paycheck, basically, if you want to call it that, or net royalty payment, is $304, right? And so at the end of the year, he gets a 1099 miscellaneous. And in box 2, where we report royalty income, he gets this 1099 from the online platform that shows he got royalties of $320. So you notice they report the gross amount of the royalty there, not net of the commissions. All right. So some general background on royalties, because I think it's really important to set the stage here as to how these are working. So royalties, again, when they're paid to individuals, they can go on either Schedule C or Schedule E. Now, royalty payments, because they're not services income, right? You are receiving compensation because somebody else is using intangible property, right? They're using intellectual property that you created, so it's not a payment for services. Now, royalty income, the starting point is generally that royalty income is characterized as portfolio income. And so portfolio income is not business income and it's non-passive income. And so that's important because portfolio income, when we think about the different types of income, the different buckets for U.S. tax purposes, we have active, we have passive income, and then we have portfolio income. So for a creator like John, it's really important that you determine how are your royalties characterized. Are they classified as business income, or are they going to be classified as non-business income? Now I have a video that covers a little more in depth as to how you kind of determine, which way to go on this. But generally speaking, at a high level here, your royalty earnings are going to be characterized as business income if you are actively engaged, kind of on a continuous basis, in creating this intellectual property, right? So if you're not just doing these one-off projects and you're never looking at it again, you're never updating it, then generally it's not going to be a trade or business income, right? It's just going to be reported on Schedule E as royalty income. You're going to deduct some expenses, but not many. But on the other hand, if you are actively engaged on a regular basis in creating books or creating courses or creating music, right? They aren't these just one-off projects. Then you might have a trade or business. And if you do have a trade or business, then the royalty earnings are reported on Schedule C. And in reporting them on Schedule C, there's some other issues that follow there, right? So you can claim ordinary trade or business deductions in connection with that business. The net earnings that you're going to have are subject to self-employment taxes. In contrast, the income that we're going to have on Schedule E here It might be subject to ordinary federal income tax, but it's not going to be subject to self-employment taxes because John is not engaged in a business, right? He's not generating self-employed earnings. All right, so the fact pattern again here, just to summarize, what we've decided is that, well, look, John just made this one course. He did it over the weekend, didn't put, a ton of effort into it. And so based on the level of activity, given all the facts and circumstances, he feels that, well, his activity doesn't give rise to a trade or business in this context, so we are not going to be reporting it on Schedule C. We're just going to report it on Schedule E, the royalty income, and then we'll take deduction for just the commissions, and then that's it. All right. Okay, so let's start looking at the return itself and see how this is needs to be entered. So again, we're working with the TurboTax self-employed version here, 2022. So the first place we start, the wages and income section. If we scroll down to, let's see, where is it? Here we go. So the rentals, royalties, and farming income section. So we have two options here. So rental properties and royalties, right? Schedule E, that's what we want. And then Schedule F for farm income, not us. All right, so it's asking us here, do we have any income from rental properties or royalties? And the answer is yes, right? So royalty income generally applies to these bottom two here, right? So if you're invested in oil and gas leases, those types of properties, you'll get a royalty statement, you'll get royalty income. And then the expenses that come along with that are generally just depletion. And then intellectual property, that's us, right? So we created some intellectual property, or we created a course, we're selling it. And so that's what we need to be reporting on our tax return on Schedule E. So we'll go ahead and click yes here, move on to the next screen. And so it's asking us, what are we going to be reporting, right? Rental properties or royalties? Well, we're reporting royalties, right? So it gives us oil, gas, minerals, or copyrights or patents, right? Copyrights or patents are intellectual property, right? And so that's the bucket we want to be in. All right, so it asks us just some basic background information on, most of this actually doesn't get transmitted with the return, but it's good to be as complete as possible just within TurboTax. So if you have multiple royalty streams, you can easily kind of track which one you're working with. So we're going to put just course royalties here. I think that's sufficient. And street address, we're just going to use John's, street address because he doesn't have a separate trade or business here. The reason why they ask this is, they think that maybe you're generating some royalty income, from an actual property that has an address. Obviously not the case here, right? We're selling a product online, so it doesn't really apply to us. So we'll go ahead and enter that. Okay. Now it's asking what type of royalty income are the course royalties. Well, the most appropriate option here is likely this one, right? Other intangible property, right? It's not oil and gas income, mineral properties, standing timber, right? None of that applies. So next one is asking us, do we make any payments for course royalties, right? So this is, do we make any payments in the course of our business for which we might need to file a 1099? And the answer is no, right? John didn't pay anybody to help create this course, right? He did it all by himself using his own time and basically incurred little to no expense apart from just his efforts, right? So we're going to answer no, didn't make any of these payments. Do any of these uncommon situations apply? Partial owner or distributed part of the income to somebody else? No. My property is on an Indian reservation or in a disaster area? Also no. All right, so it gives us a summary here of the royalty information. We haven't had to enter any information on the actual dollars yet, so that should be on the next screen. Okay, so it's asking us here, enter the income for the course royalty. So how did you receive the income? Well, all the income we received was via cash deposits, but we got a 1099 miscellaneous for it. So this section up here, if you click cash checks and other electronic payments, what they're getting at there is, did somebody transfer cash to you but there was no 1099 issued? Okay, use that one. But in our case, we did receive cash, right? It was deposited into his bank account, but he also got a 1099 miscellaneous reporting it. So we're going to go ahead and select that option. And so let's see. So enter the name of the payor. So this would be the company that's hosting the course for John that actually made the payments. So it should be like fake course provider Inc. Something whatever the company is. Obviously, it's not a real company, and they should have an EIN on the 1099, so that should be available for you. Okay, so boxes 2 and 4 are certainly the most relevant ones. So box 2 is the actual amount of royalty income that we received. And so in our case, it was $320. Box 4, federal income tax withheld, generally is going to be 0, right? If you're a U.S. person, you're not going to be subject to the federal income tax withholding unless you have a problem with backup withholding. Where this could be an issue is if you're a non-resident, right? You might have some federal income tax withheld, but in our case, John's a U.S. citizen. He lives in Florida, so no withholding in that regard. Okay, so I'm going to continue on through. Do we have any more income from the course royalties? No. Okay, so now it's asking us, this is where we have to be more clear about, do we have any expenses that we can deduct in connection with this activity, or have we created any assets that we might be depreciating or amortizing? Now, for the royalty income that is characterized as we're treating it, there's not a lot of expenses that you can deduct in connection with this type of royalty income, right? Because you're not engaged in a trade or business of creating this intellectual property, so it kind of limits the amount of expenses that you have. The only expenses that you can deduct are those that are directly related to kind of selling and hosting the asset itself. So in our case, the one expense that is incurred is the commissions, right? So we sell it for a certain amount on this website. We incur some commissions. Okay, those are deductible, but nothing else really beyond that is going to be deductible in this context. And so that's why this very, very important that you figure out, do you have an actual business, right? Because if it's a business, there's going to be a lot of business related deductions that can be taken in connection with that versus non-business income, not too much. So if we go through here, it's going to give us some options for what kind of assets or expenses we have in connection with the royalties. Now, the assets section, this is really important. I'm going to talk about this for a little bit here. What they're asking us here is, did we incur a lot of costs? So either did we purchase the intellectual property, or did we incur a significant amount of costs that we capitalize those expenses, and then now we perhaps need to amortize them? We didn't buy this course, right? John created this himself, and the only thing that he really incurred from a cost perspective is just his time. And so for that reason, there's really no asset here. I mean, he certainly has a self-created asset, but his basis in it is basically zero because he didn't spend any money to create it. He just used his time. And so that's why on the asset section here, this is really not pertinent for John's circumstances, right? Because it's not as if he spent $100,000 on contractors to help him develop a course. He didn't spend anything. So there's no property that's been created, or there's no property that's been created because we're capitalizing expenses. But what he has incurred are some expenses in connection with actually selling the course on the website. And so the commissions is certainly a popular one. Most of the time when we see book royalties, music royalties, there's usually always commissions expense in connection with that. And so we do have a line item here, right? So we're going to enter the commissions for this activity. So, okay, so it's asking us, okay, here's a summary of the income, right, from the 1099. Then we have the commissions area down here. Remember, the commission was 5% or $16 on the course sales, so we'll enter the 16. Now we've got those items in there, and it's asking us down here to review this piece, right? So do we have any carryovers, limitations, or at-risk rules? Okay, we'll click on that and have a look. Okay, so any of these apply. I have money invested in this rental property that I'm not at risk of losing. Well, it's not a rental property, so no. We did not dispose of any non-depreciable assets, and we don't have any 179 carryovers. None of that applies. All right, so all of those are entered. That's great. So let me go ahead and click done here. Okay, so is this a qualified business? So is this QBI? And the answer is no, right? So remember, this is non-business income. It's not even a business. So yet, let alone a qualified business. So in our case, we're going to answer no. This income is not a qualified business. Okay, great. So now we're back to the summary page here. So now let's have a look at the return itself and see how all these numbers kind of panned out. Okay, so what we're going to expect to see here, what we want to see is no additional Schedule C, right? Because this is not a trader business. So we should see these amounts added as a Schedule E, right? So it should be page 1 of Schedule E. So let me scroll down here. Okay, so there's the Schedule C for John's consulting business, right? And that's fine. That was already in there from the prior videos. And we haven't added a second Schedule C. What we should have is Schedule E, page 1. Okay, here we go. So Schedule E, page 1. And this is where we report supplemental income or loss, right? So from rental properties or the royalties. So we have in part 1 here, line A, the type of property here is royalties, right? So we've indicated code 6 there, right? That's royalty income. And then you also see here on line A, we don't have a physical address. Remember, we had to key in that address. Clearly, it's not relevant, right? Because it's a royalty payment, so that's why it's not even being listed here on this top line item. And that's fine, right? It's royalty income. You don't need an address. So in column A, we have the royalties. There's the royalties, $320. We have our commissions expense, $16. And so our net amount is $304 in income. All right. So $304 in income coming from page 1. And then page 2, the previous video where we went over PTPs, we have the PTP income was $711. And so in total, we've got $1,015. This is flowing up to Schedule 1. So some important things to highlight on Schedule E here. Remember, this is non-business income. So this income, the 304, this is not being included in John's self-employment tax computation. It's still going to be subject to ordinary income tax, and that's fine. That's appropriate. But, this item of income, again, it's just ordinary income. It's non-business income, so it's not going to be subject to federal self-employment. So John's going to save a little tax dollars there. If, on the other hand, he wanted to treat this as a trader business, then we wouldn't have a Schedule E for these entries, right? We'd have Schedule C. We would have other expenses, perhaps. And then ultimately, those net amounts would be subject to not only federal income taxes, but also the federal self-employment tax. Okay, so that covers it for this video. I hope that was helpful. If you have any questions, feel free to leave me a comment below. Always happy to answer, and I can. And I look forward to seeing you again on the next video. Thank you.